So great to see you, Chico. It's been a while. Out of over 60 brokerages that I've worked with, I was always impressed by the way you would care for your agents. And I know you've been recognized by Mike Ferry as one of the top brokers within the system. One of the big inspiration of connecting both of you is because I know you invest, Navid, and I know, Chico, you have you have a great agent community. Navid just got his broker's license after being an agent for, I think, 5 or 6 years, maybe longer than that. Navid and I used to work together at the same office. He was an agent. He was a new agent when I was working with him when I was managing. But I wanted you guys to meet because Navid had some really great questions for me when we had previous conversations. And you and I, Chico, had a great conversation.
What we think is going to happen with the economy, it's going to go down. The real estate market is going to crash. That's what we are now expecting based on the amount of people that asked for forbearances, and they were given for the first 6 months, March through April through September, and September through next March. That's 6 months. They extended it for another 6 months. It's going to be next March 2021. So we feel there's going to be a lot of opportunities for investors like yourself to buy properties, where at this moment we're fighting like dogs to get a listing to put one of our buyers into escrow, because there's very limited inventory because of the interest rates. We've, in an FHA transaction with 3.5% down, we locked the rate at 2.875 for 30 years, fixed for 30 years. So, that has created a lot of momentum into the market, where the market is extremely, extremely hot at this time. However, that's going to change next year, according to some of the economists that we're listening to that are not in the mainstream media or mainstream economists. There's a guy named Peter Schiff that I love following, and he's talking about how the dollar, because there's a lot of money that's being printed, is going to crash. So we got to get into like silver and gold, blah, 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 right? But we've been around for so many years that we've seen like 3 different cycles in the real estate business. And every time there's a downturn in our marketplace, that's when we pick up a lot of properties. We either flip, keep, and this way we can make a lot more money. So, that's been one of the things that we've done. So, as when this last crash in 2008, we were expecting that crash because we knew, listening to some economists, that it was going to crash, where most of the economists were saying, oh no, it's going to keep on going. Don't worry, next year's going to be fine. But we knew that the subprime market was going to have a meltdown, and it did. So, we kind of like are ahead of the game, and this is how we prepare our agents so they can know exactly, what's ahead of us. So I totally feel, and I know that next year is going to be a great year to invest money. So we can invest some money, buy some properties. Now, Navid, do you like keeping properties? Do you like flipping properties?
I've done both. Mostly I've been flipping, for the last like 7 years, been flipping single family residences, some condos, a couple multi-units here and there. It's been crazy to see every, year on year, prices are going higher and higher every summer, 10%, 10%. I understand what you were saying, the forbearance plan and the extensions of people delaying their mortgages is going to eventually lead to a surplus of housing, because those people are going to have to foreclose. But I do, believe and have read that most of these people on these forbearance plans are going to be able to negotiate and, keep their existing, keep the loan going and add on the missed payments to the rear end of the loan. I was wondering if a large percent of Californians, Americans are on the forbearance plan. Here in California, I would imagine most people now have a substantial amount of equity in their home. So I don't really see, unless, natural disaster or something, the market to straight plummet. as far as I'm seeing, single families are becoming more scarce by the day, and prices are still going up, even going into the winter time, which historically, in the last 6 years, every time I've came to the winter season, the market kind of slows down. There's Thanksgiving, there's Christmas, there's New Year's, so on and so forth. So it's hard to kind of fathom when the market will actually go down. I don't know if we'll feel it that hard here in Los Angeles.
You're absolutely right, but you got to remember that they are going to work with just like in the past, banks were able to work with those the owners of those properties. They did the loan modifications, they did short sales. But one of the things that we need to take into consideration is the amount of money that is being printed. That's devaluating the dollar. So if the US dollar tanks, the whole entire economy is going to collapse. Now, keep in mind that supposedly, according to the statistics that the government is giving us, 40% of the businesses are not going to reopen. So a lot of these people that are not able to go back to work now are going to have to either sell the property before they lose it because they do have equity, right? So, but there's people out there that they keep on charging the credit cards and they keep making their payments. But the bottom line at the end is that they're going to have to either do a short sell, because the banks are not going to do a loan modification with somebody that doesn't have a job. They'll do a loan modification with somebody that has a job, right? So, because of COVID, now 40% of those homeowners that are not going to be able to, 40% of the businesses that are going to reopen, they're employing a lot of people. So, yes, banks, because we talked to our coach from the Mike Ferry organization last week. His name is Joan Joseph, and he was telling us, because he knows a lot of people in the higher senior management of Bank of America. And he was telling us that, yes, Bank of America is saying, look, we're not going to foreclose. We're going to work things out just like we did. We learned our lesson back in 2008. So we're going to do loan modifications. However, if somebody doesn't have a job, we're going to have to do a short sale if they don't have equity. But we're going to have to, ultimately, we're going to have to foreclose on that individual because they don't have a job. Now, it may take a while for them to foreclose, right? Because remember, in 2008, it took a long time. Some of these people,
Over a year.
Years and years, and they had filed a notice of default, but they never foreclosed. It was like, they kept on working with these people, because they didn't really want to do that, right? But this time around, I think that it's going to be because of COVID. The only reason that we are seeing the stock market going up is because the feds are now purchasing a regular stock from regular companies, something that is illegal for them to do. But to keep those companies afloat, they're having to buy that stock that the companies are selling, so they can keep those companies looking good, right? So that's something that they're not supposed to do legally, but nobody's paying attention to that. So, so once they start to see that, hey, wait a minute, the stock market is going to crash, and it's going to crash. I'm not telling you, because they cannot keep on doing what is called quantitative easing, which means that the feds in the past, what they've done is they allow the economy to recover on its own. Whatever companies are going to go out of business, they go out of business. But since the last crash and the previous crash, they have been doing quantitative easing. They've been doing the bailouts. So, but this time, it's even at a worse level. They did a quantitative easing back in 2008. Otherwise, in 2008, we would have had a stock crash. But they went ahead. Nobody paid attention to that. If you wanted to research quantitative easing, you will see how many the feds have done. Like this last one was like over $3 trillion. and they got another one coming out. So ultimately, what we're going to be seeing is that the dollar is going to lose its power in the world, because right now it's a reserve currency. Right? But once governments are starting to see, hey, wait a minute, this is only paper, and these people are printing money like if there's no tomorrow. And then the Federal Reserve Chairman Powell, he said, hey, we're going to keep this going. Doesn't matter. We're going to keep on doing this. So they already told us that they're going to keep on doing this. So eventually, the stock market is crashing because they're, this coming year, we're going to go into what is called negative interest rates. Negative. Have you heard of negative interest rates, Hector?
Yeah.
Yeah. What's your take on negative interest rates? I mean, what do you think it is?
Well,
go
that's
ahead, Navid.
when we are, it's the inflation of money amongst the consumers, amongst people, that the government is, somehow taking money from our funds, needs to take the amount of liquid cash out there needs to be reduced for the economy to perpetuate properly.
Okay, so here's a simple, Germany's doing it already. They're in a negative rates, and also Japan. And basically, what it is if you're gonna borrow, if I was going to lend you $1,000, Hector, for a week's time, and I said, Hector, just pay me $50. I'll charge you some interest for a week. I'll make $50. You get $1,000. And then that's a pretty good deal, right? Because you say, hey, that's not a problem, Chico, I'll pay you $50. How about, but then if it's an even, Hector, I'll do you a favor, I'll lend you $1,000, but I won't charge you any interest rate. That's even better for you, right? But how about if I tell you, Hector, I'll lend you $1,000, and all you got to pay me is $950. You think that's wise on my part? Because I loaned you $1,000 and you're only going to pay me back $950. So I'm going to be off by $50. Mm-hmm. So the government the government of Japan and Germany, they're already doing that with the banks because they want to keep everything afloat. So what they're doing is the central bank is saying to the banks, hey, I'll lend you the money, and I don't care if I lose the money, because those are negative rates. So the U.S. is going to go into negative rates this coming year, just to try to keep things afloat, but they won't be able to. So there's a major disaster. Now there's something else too that people don't talk about, and it has to do with the 90-year cycle of a depression. Ever since the stock market was open back in the 1700s in the US and earlier in Europe, every 90 years, there is a depression. Our last depression was back in 1929, and it lasted till 1932. So if you add 1929, right, to 2019, that's 90-year cycle right there. It's a 90-year cycle. Now, COVID came in and messed things even worse. But this thing was already happening. If you notice, Navid, prior to COVID, we were in a recession already. We were already in a recession, right? And now we're into a major recession going into a depression. Now, that's something that people don't talk about, the cycle of the 90-year depressions. So it's just, we got to be ready. I understand that, right now, I was telling Hector, I don't, right now I'm not buying properties. I mean, if I get a property that is priced right, where I don't have to do much work to it, and I'll make me a quick 30, I'll be happy with that, but it's got to be in and out. It can't be where I got to be pulling permits.
I'm still seeing a lot of developers in the market, people still buying, building new builds that are, projects that are going to be, 1, 2, 3 years before they're complete. They're still doing it, I live in Encino off of White Oak and Burbank. There's a investor over here on my block. He just bought a house for 650. He tore it down and he's building, a monster. And I was talking to him, and his idea is that the extreme shortage of single family isn't going to go away.
That's correct. But obviously, everything tanks. So I mean, back in 2008, we were still selling homes. 2007, people were still buying rehab properties. I mean, I can tell you this much, Navid. There were a lot of my friend investors that got stuck with properties and they lost it all. I mean, they lost it all. However, the same investors, since they know how to do it and they know how to get where to go get the money, they came back after that crash. So yes, there's people doing it now and they're going to keep on doing it because, number one, they're listening to mainstream media where they're saying, oh, everything's going to, Southern California, the economy is going to be okay. So we believe those things, but then we're in the inside where we're saying, hey, wait a minute, we've heard that in the past. So we just want to be careful because, I would tell you right now, Navid, if you want to buy a piece of property, you're going to go in and out, buy it, But if you're going to be like your friend where he's going to demolish a house and he's got a 2-year project going on, I wouldn't advise that to my clients because I wouldn't do it. Why would I want somebody to do it where they're going to be getting burnt later on? Now, the chances are better that the market crashes than it's going to go up because of the economic conditions that we're seeing. I mean, have you ever seen, the U.S. debt clock on the internet?
Yeah, I know I know those numbers are nuts. I've seen them. It's
and it's ridiculous. Unfortunately, nobody's paying attention to that. There's a lot of people check this out, Navid, Hector. Has anybody during the election, you hear Trump or you hear Biden, has anybody any of the questions that were addressed to them, or have they spoken out what they're going to do about the deficit?
No, they really have not.
They haven't, man. They haven't.
What they've been saying, but nothing about that.
So they haven't, but it is a major problem that we're going to be facing, especially with Social Security. Social Security may go broke by the year 2023, I believe. May go broke where they're like, hey, we ain't got no more money. What are you going to do? So, so the theory is let's print more money. Let's digitize money so we don't have to go into trouble. But that has proven in the past that the dollar depreciates. So then there's going to be a dollar crash.
It has to, because all the money they printed, is going to cause inflation. We're finally going to see inflation, and at the worst part with the rates being so low, I understand where the outcome, you have to assume the outcome is going to be bad. Obviously, each president, it's going to have a different effect. And who knows what kind of bailout they're going to do for homeowners or for banks and all that. But in the end, where real estate falls into play is, I think, investing in real estate is still a more secure way to hold your money safe than to put it into stocks or, put it into a business or to put it into the banks for rates or to put under your mattress. Real estate at the end of the day, it's real property. It's going to be worth something. The money, inflation, we have to see something with inflation, especially with the rates being so low that they are.
Yes, absolutely. Well, that has been the fault of the feds, because when we had that crash in 2008, because they did not allow the market to correct its on its own. Then we all of a sudden we started seeing what? Prices going up where they surpass the value of homes more than in 2007. So, it's
Technically,
it's the Fed's fault. I mean, it's been a good ride for us, because, like for our agents, commission wise, we were selling houses in 2007 for $500,000. That same home dropped in 2010. It was already down to 200,000. So our commissions were like based on 200,000 instead of $500,000, right? But then all of a sudden, we started seeing 20-25% appreciation every year, and then 10%, 6% is the normal, 6.9 LA County. If we got a 6% appreciation in LA County, that is normal.
mm-hmm.
But then to see 20, 25 in 1 year, all of a sudden we got back to where we surpassed where we used to be back in 2007, right?
Well, yeah, a lot of people bring that argument to me saying, our prices are higher now than in 2007. However, that was 13 years ago. So technically, they should be higher now. So are the prices that high in value right now? I look around the houses in the valley, Reseda, Canoga Park, Winnetka, 6, 7, 800, and you go into the inner city, South Central LA, they're about the same price. So it doesn't really, it's hard to find out when and how these prices, especially, in the better parts of Los Angeles, are going to come down without, what you were talking about, without the banks having to do short sales because people don't have jobs, or in my opinion, a natural disaster or something of the sort,
Yes. Well, I can tell you this much. There's a guy that I want you to look up this guy, Navid. He's a very well-known economist, but he's very controversial. And his name is Peter Schiff. Have you heard of him?
I haven't heard of him. I wrote his name down in the notes you were talking about earlier.
Yeah, Peter Schiff. He's very controversial, but this guy has been on point when it comes down to the economy. People don't like him as much because, he'll give you math, he'll give you numbers, right? But he's a really good guy to follow and to learn from because he's not like the same opinion of the mainstream where it's saying, oh, everything's going to be fine, the economy's going to be fine. He predicted the crash of 2008. When everybody else was saying on Bloomberg or MSNBC Business, oh no, next year the economy is going to be, well, he's this guy. No, it's going to crash because it's toxic loans, blah, blah, blah. So now he's saying, hey, this economy is bogus, is a fictitious economy, what we're seeing because of the Fed's injecting all this money. Now,
right now with the PPP loans, the EIDL, EIDG, EDD, I do see where you're coming from with that. But at the same time, you see so many people with so much cash. Everyone in LA, they have money. I was talking to my friend. He's selling a lot of condos on the west side, Westwood, Century City. He's like, most of his clients don't even need a loan, and they just have the money. They don't. It's in one end, it's like you could see where the problem is going to start, and then on the other end, it's just like.
Well, keep in mind, Navid, that the stock market has done it very, very well. So it's been. The stock market the way it is right now. There's a lot of Fed money injected into it. Otherwise, it would have crashed by now, right? So it's good that people have the money,
Yeah.
And it's good that they're buying, but eventually the party's going to be over because they cannot sustain this forever, right?
Right.
And these are the people that make the money during the good times that when the market drops, they'll be able to buy because there are going to be some good stocks out there too that are still going to be okay to buy, right? So it's not like every stock is going to go under. So you just need to know when to get out and when to go back in, right? But there's a lot of money, man. I agree with you. I mean, there is a lot of money, but the question is, how long can the Fed sustain this quantitative easing? Like right now, they got another what, $2 trillion that is just waiting for Congress and the Senate to approve on how they're going to distribute that money.
Right.
So if you look at in history, how long it took to get to $1 trillion in debt to where you just take it in a few months, it's ridiculous, you know. But
Yeah.
But you know, people, fortunately enough, you know, when we listen to people that are telling us, hey, you guys got to be careful with this and that, that may come to benefit us because we're not going to be stuck with properties where we're going to lose its value. Now we have to sell them cheaper and end up losing some money, maybe, you know. So I'm telling all my friends, hey, if you got any real estate right now that you need to get rid of it now, because you can get some top dollar for your properties. You know.
Yeah, but on the other end, if you know, for example, I have almost double the amount of equity in my house than I did when I bought it, of course, 4 or 5 years ago. But if I sell it, let's say I sell it 800-900, where am I going to go? I have to go buy something of equal or rent something of equal. So it's
Yes,
like,
absolutely. That's what we're recommending to our regular sellers. And some sellers are taking, because remember, they lost their homes back in the days. Some of them sold high too, and they had maybe 2 properties, right? But anyway, so we're telling that to some of our sellers to sell now and go rent. That's what we told them back in 2007, 2006 when we saw the storm coming. And then in 2007 is they did away with the subprime lending. So 2000 so nowadays we're telling the same message. Tell your sellers to go to sell high and go rent. Now, if you're married, you know, you can have $500,000 tax shelter on a 121, right? Where you live 2 out of the last 5 years on your property, you know, guess what? You can take advantage of that tax benefit,
right.
or you can, you know, have $500,000 without having paying any taxes, you know?
Right.
So, and then if you need to do a 1031 exchange, that's a totally different ballgame, right? That's up to the individual.
Do you think that, for example, you're talking about, you know, 2008, 7, 8, and 9, that crash, the houses came from 500K to, you know, in the twos.
Yes.
More
That's like
than
a 60%. That happened in our marketplace. Our marketplace, Southeast area.
Do you think that it's going to be a 60% crash?
This time, because of the depression, because there's going to be a depression, it's going to be worse than the 60%. Remember, that was considered a great recession. So this time around is going to be a great depression. So I believe that may go up to like 80%, not 60, but 80%. That's my take. That is going to go more than the last one.
How could that be possible? Let's say it does go down 80%. That would be, you know, taking into account inflation, that'll be almost like free. You know what I mean? Because the dollar has lost value, like you said, minimum wage went from $10 to now like almost $15. It's because $10 doesn't get you a cheeseburger anymore. Now you need 15. Yes. You know, the same thing with affordable housing, all that. I just don't see how it could make sense to come down with the 80. Anything over like even 30% sounds kind of.
Well, if you look at the statistics, you know, because of subprime, because of mortgage loans only, listen to this, mortgage loans only, we were able to drop 60%. So if you look at the history, you know, let's say in general in LA County dropped 50%. So we're only talking about a 30% a Great Recession versus a Great Depression, right? So it doesn't make any sense because nobody believed it back in the days, 2007, 2008.
Agreed.
If you would have, we would tell our clients, hey, the market's going to crash, you're going to lose 50%. Are you crazy? But it is going to drop, man. So my advice would be, Navid, if you're thinking about buying, you can buy now, but buy something where you're going to go in and out. But if you're thinking about doing what your friend is doing or that investor is doing, where they're going to knock
Definitely not
property down and build something new because it's going to flip that property.
Yeah, no. I'm leaning towards affordable housing. I'm trying to tie up some multi-units, and most likely, based on the cap rate, I think as long as an income property is paying rents and you're making your income, you're not going to feel that huge deduction, that huge loss of value when the market does crash than you would in a single family or a condo,
Yes, but just keep that in mind too, Navid, that, we got some crazy laws, right? Right now, people, you can't do evictions, so if you got a mortgage payment where you're closing on a multi-unit building and you're not getting any income because of the laws, then who's going to be paying that mortgage?
Right.
So you want to make sure that you do, set some money aside just in the event that some of those tenants are able to meet their obligation because they're taking, refuge in those laws, right? Sooner or later they have to pay you, but in the meantime, you still got to make that mortgage payment.
Yeah.
So,
Yeah.
I mean, what kind of a cap are you talking about that you're getting on that one that you may want to be getting?
So I'm currently trying to buy one in North Hollywood right now. It's a 3-unit. I'm hoping to get one of the tenants out who's occupying the largest unit, which is a 3-bedroom, 2-bath. If he does get out in a reasonable time frame based on the agreement that I'm going to set forth, I could get that, and I do like a 25, 30K remodel. I could get that cap rate over 7%.
Okay. That's a good cap rate.
Just that one tenant. Now there are still 2 other units that their rents are almost 50% below, average market value, rent, which could also, it's hard to tell. I already got a feeling from that one tenant. Most likely I'll be able to negotiate with him, but the other tenants are maybe. And I think as far as, just the property value goes, it could turn out to be a win.
Very good. So at 7% cap rate, that's good. What is the gross multiplier that you're getting in that Hollywood property right now?
I think it's right around 13 or 14.
Okay, that's good.
Yeah,
That's a good one.
Property.
We're getting here in our southeast area, we're getting gross multipliers of like 14 times, 15 times. Sometimes you go up as high as 20 times,
Yeah, in the less more high class area, I guess you could say, the cap rates are higher. I've been looking at even new builds in Long Beach area, Hawthorne. Those cap rates are easily 5-6%, but
Okay.
you have a difficulty with tenants and things like that.
Yeah.
It's a little bit more harder to deal, of course.
Yes. One thing I can tell you is do not deal with, if you got tenants, rent control, we're going to be taking over. I mean, I would tell you don't do it unless you're going to do them pay the relocation fee. You have to have that factored into your purchase,
Yeah.
I'm having to pay somebody right now like $21,200.
I had an attorney write up a couple contracts, basically stating that I'm going to be putting relocation monies into a type of trust account, and I'm signing it, notarizing it through escrow. The tenant's going to notarize it, and those monies are going to be held until after close of escrow. Will, upon written, and I have to physically verify that they've moved out. Those funds will get dispersed to them. So it's all, it's pretty new right now. I'm just waiting to see what'll happen. I just found a little bit of wiggle room within multi-units, and I've been trying to capitalize on it because I have had zero luck finding my usual bread and butter single family and condo flip.
Yes, it's somewhat challenging right now. I mean, it's not like they're not. I mean, everybody wants to buy them, right? There's a lot of buyers, like you said, people's got money and blah blah blah. But it's somewhat of a difficulty right now to find them, because I mean, they're scarce, inventory scarce as it is. So
Yeah.
can you imagine a good bone comes on the streets, man? We're gonna eat that baby.
Yeah.
We're not gonna waste any time, right?
Everyone in real estate right now is pretty hungry and pretty cutthroat. Everyone's starving for business, I guess you could say.
Yeah.
What I've seen, I have a lot of other agent friends and brokers and friends, so they're all telling me how difficult it is to procure business. So.
Well, it is. But I mean, like I tell the agents, I said, listen, man, if you hustle every day, you're making your contacts, you're establishing conversations, because you got to have a business plan. And if you're doing that, and then you leave follow-up set appointments, and you go on those appointments, and you're able to learn the scripts on what to say, how to respond to people, right?
Yeah.
Then you're able to get that listing contract or get that buyer contract. But if you don't, the beginning is prospecting, right? Well, actually, I think the beginning is the mindset, right? Because if you don't believe you're going to do it, then you might as well pack your bags, because you're having any doubts that you're going to go out there, you're not going to get business. Oh, nobody wants to buy, nobody wants to sell. You're damn right, nobody wants to buy, nobody wants to sell, but with you. But how come Pancho over there got a listing and double-ended it? Because he's out there, right, hustling. You're not. So, it is challenging right now because of the lack of inventory, but at the same time, people are still listing. Hey, Navid, nice talking to you. Hector.
Yeah,
Nice
appreciate you
meeting
doing
you,
this.
May God bless you in everything you do. Okay,
Amen.
you and your familia.
Blessings to all you guys. Appreciate
All
you.
right, same to you, Hector. Bye-bye.
Take care.